Welcome to Cattle Call. I'm Chad Moyer. Cattle Call is brought to you by Wolf Auto, small town strong. And once again, we're joined by Brad Kooima from Kooima Kooima Varilek there in Sioux Center, Iowa. Brad, thanks for joining us again here this week. Maybe before we talk about some of the specifics in the market, just give us your thought, over the last week or so, what have you seen for attitude in the market? A lot of talk about tariffs and demand and things like that. But just kind of summarize over the last 6 or 7 trading days, what has kind of caught your attention?
Well, that's a great question. First, Chad, thanks for having me on. Looking forward to getting to know you better and, trying to get working together here on this program, which I've enjoyed for a long, long time. The last week here, to summarize, and that's a nice way to look at the market, I think, in a way, because a couple of things have happened. One major thing that's happened here, Chad, is that we've ripped a page off the calendar, okay? The end of March was signaled a month end and a quarter end. And the reason I think it's significant this time is because we have got huge open interest in the cattle, second only to 2019 for this time of year. So we've got the funds, a big, big, big part of that length. Funds by nature, just by the way they're set up, fund managers are incentivized to take profit because that's how they're paid, as a percentage of the profit. So we often see that evening up or taking profit at the end of a month, but especially at the end of a quarter. And we saw that. We saw a pretty good correction the last couple of days of March. So I was curious as we came back into the new month now, whether or not, perhaps we'd see some of that renewed buying. And that certainly is what we've seen. So it's a non-fundamental, it's not like we're talking about what cattle weigh or how many of them there are. It's really a function of the futures market, but that obviously it's a big part of how we trade cattle based on what the futures are doing. So first couple of days of April have been pretty impressive, punching new highs on the June cattle here today while we're talking.
Yeah, absolutely. And if you, what more, tell me more about that attitude. And if we go from, the future side and over and how that's translated into cash business, the last few weeks, that has been pretty impressive to watch again, huh?
Oh, for sure. The one thing that we talk a lot about in here, Chad, with the other partners of mine and brokers, of what do we think is going to happen here next in terms of the basis? Because futures, in my opinion, certainly have a high impact on what we get for cash cattle. If the basis is weak, if the basis is strong, it's going to incentivize the hedgers to either be a little more easy seller or maybe a little more stubborn seller, depending upon where futures are in comparison to cash. Now, we've gotten very used to, Chad, here for an extended period of time where futures have been below or even much below cash, which sometimes it's a bit frustrating because sometimes I feel like, we're selling those cattle plenty easy. We could wait, but the hedger says, yeah, but I can cover my hedges, $6 below what I'm getting for cash. I get it. And ultimately in the long run, that is actually, I think, supportive and friendly to the market because we continue to stay very current in a situation like that. Now, best cash yet last week in the South was 209 to 210. Now you've got April futures at 210.37. We're actually probably from a basis standpoint as strong futures compared to cash as we've been in quite a while. So my guess would be at the last part of this rally, you asked a pretty in-depth question here. I'm sorry, I'm getting a long-winded answer from me. But the last part of this rally, which I don't think we're done yet, I don't think we've made our highs yet, is going to happen a lot with the cash. Typically, when you start to get closer to May, your basis gets wider and wider and wider. And what I'm trying to say is that the cash will be above and maybe even much above where the futures are. I can remember times in May where futures have been $10, $12 discounted to cash. It wouldn't surprise me at all that we'd have a similar thing this time too. So the other part of what futures does for the cash trader is psychology. If futures are sharply higher, the guys are going to be tougher, waiting for better bids. And conversely, if the market's falling out of bed, they're a lot easier sellers than they would have been otherwise.
All right. And I wonder if it's an indication of what demand is doing as well. Once we get beyond futures, beyond cash, what's happening out in the marketplace, we've seen this choice select spread widen out. I was just at a meeting last night. We were talking back in February, that spread was single digits. We're back above over $20 a few times here. Now, is that an indication of what attitude is wholesale, retail level right now?
It's a nice question. I would say there's two things that I would react to that with. One would be we clearly have strong demand for choice. versus select. So it's an indication of strong demand for choice, that we've got a consumer that has gotten used to it, likes it, and is willing to pay for that a little more expensive product. The second thing is it has to do with supply and the kind of cattle that are out there. So to create grade, to get cattle to grade choice, you have to have them on feed longer. Okay. And what's happening now in the north is we're transitioning out of yearlings that we bought in the fall to calves that we bought in the fall, and the calves aren't fat yet. They need more time, they need more days, they need more groceries, okay, before they're going to grade. So what you're seeing, I believe also, not only are we seeing proof that the demand is still good for choice, but we're also seeing less choice cattle, as we transition out of the type and kind. Your demand question is good. I get asked it all the time, some version of, yeah, but what about demand, Brad? What about demand? If I could predict when demand was going to shut off like a spigot, I'll tell you what, I would be a really, really successful guy. Supply, we can figure out. Demand is difficult. But the only thing I can say about demand is what it looks like today. And to me, demand today looks not good. It looks spectacular. Okay. Last year, for instance, the whole year, the total fed slaughter was only down 0.5%. 0.5%. Average weights were a record. We actually had more beef production, and yet we went to new all-time highs. So it wasn't the supply, huh? Apparently not. It was demand. So long answer to a great question, but at this point, at least, demand seems to be alive and well.
Okay. Now, there's something that gets wrapped into this demand discussion. And again, that's kind of the unknown. What are consumers going to do? And that is the economic situation where we are at in America. And, as we sit and record this today, we're all on pins and needles, wondering what the administration is going to do with this tariff announcement, right? So what do you... kind of tired thinking about it, trying not to, but it's in almost every headline, isn't it?
The T word, absolutely, yeah. Yeah, I'm beyond tired of it, honestly. But that's the cards that are dealt, so that's what you got to play here, right? Let me just try to break down briefly because I don't know what the speech is going to be this afternoon, and nobody does. And he may say something this afternoon that might be completely different on Friday. We've also got used to that, right? That coin flipping back and forth. But for me, the tariff thing is, I look at it in kind of two different fronts. If we're talking about the North, this is called cattle call. So if we're talking about North American tariffs, which we spent a great deal of time on, if we continue to accelerate or increase that, reciprocate, whatever, make them bigger, okay, that's a net positive for cattle, I believe, because last year we imported an average of 14,000 fed cattle a week from Canada. So if we make that more difficult for them, more high price, that's actually maybe a net positive on cattle. So that's what I would say about that. Now, it's the other part of the tariff thing. And I don't know how, I'm not an economist. This isn't my jam. But the worry, I think, is, we just spent quite a bit of time talking about demand. If indeed this whole tariff thing escalates to where we're in a reciprocating trade problem with multiple countries, multiple trade partners, it becomes a problem here where some economists might say, well, that's going to increase prices, that's going to increase the chances of inflation, that's going to increase the chances of an economic slowdown. I don't like to be Debbie Downer, but I think, if you had to put your, put the mic or the telescope out and say, well, what things should I be concerned or worried about in terms of the cattle demand, and specifically the cattle when you're at record prices, would be if you had enough of that kind of news, Chad, to indeed maybe start to slow things down from a macro standpoint.
All right. I think one just question to kind of wrap things up here for this week anyway is we've talked about a lot of things that have happened here over the last week, kind of what's going on. I guess what in your mind should we be looking for as we move forward, through cash the rest of this week and as we get deeper into April in the grilling season?
Short term, I think the market with this big rally yesterday and today, Chad, we're going to need to see some higher cash to justify the rally that we've just had, because we've taken April cattle to a par or even a little bit of a premium to the south. So in the short term, we need to see that follow through on the cash. I think we probably will get that. A longer view, I've got four screens here with charts, and the one that's right next to me is the one that is the macro type chart, the S&P futures, some of the equity stuff. So that's been a pretty good harbinger. If the stock market trader feels better about what things sound like from tariff economic standpoint, the cattle seem to follow along with that. So it's like trying to sleep with one eye open, right, Chad? It's impossible, but that would be the thing I would keep an eye on for sure.
All right, very good. Brad, as always, thanks for joining us on the program today. Appreciate it.
You're very welcome.
Again, that's Brad Kooima Kooima Varilek in Sioux Center, Iowa. Cattle Call is brought to you by Wolf Auto, small town strong. Thank you for joining us, and we'll see you next week on Cattle Call.